Listen, this chart tells a very, very, very scary story. This is the exchange volume trading chart. And what you can see is that 82.5% of the exchange traded volume in crypto is now trading in Asia. And only 10.3% of that is trading in the United States. The scary thing is that if I look at this chart a year ago, 64% of the crypto trading volume came from Asia and 27.2% came from the United States. So what we're seeing is that Operation Chokepoint and the US's efforts to choke crypto and to maybe potentially kill crypto are actually really, really having an effect. And whilst the US tries to regulate crypto, what we're seeing is that Asia, and specifically Hong Kong, has recently opened its borders to crypto specifically for retail investors. And a lot of investors are now asking real questions. They're asking whether Hong Kong is a proxy for China and whether Hong Kong being part of China is actually a proxy for China starting to bring in crypto trading and crypto investing, specifically around retail investors. And if China are doing this, are they doing this to try and get some kind of independence of the United States, or to try and get ahead of the United States when it comes to this amazing, amazing technology? The other question that a lot of investors are asking is whether this move by Hong Kong and this move by the rest of Asia is actually something that can bring some kind of volume and volatility back into the market. Now, when I look at the volume, let me just show you guys some volume here. Let me look here. Let's quickly go and get a volume indicator. What you'll see is that the volumes aren't looking very good. This is on Coinbase, but specifically if you look at all the exchanges, the volumes aren't looking very good. And the volatilities also aren't looking very good. If you look at Bitcoin's volatility, because there's no volume and no liquidity, we've got the volatility going down to very, very low levels. And a lot of people are asking whether Asia could come in and save the day. So today we are moving our show from the West and we're moving to Asia. We're going to give you all the alpha from Asia. We're going to take a deep dive into Hong Kong. We're going to take a deep dive into China. We're going to take a deep dive into Japan. We're going to be covering the whole of Asia to see whether Asia can bring some capital, some movement, and some volatility back into the crypto markets. It's going to be a massive, massive, massive show. You really don't want to miss this one. All right, we're back. Good to be back here today. You can think of today as kind of like a special edition of Crypto Banter. You can almost think of it as like a banter, but a banter on a Tuesday, because I was going to do this last week Friday, but we had some technical issues. And so I thought, after hearing all the alpha, I've got to bring this high alpha show to you. It's going to be one of the most fascinating shows that you've ever tuned into. And you can, as I say, you can think of it as a banter on a Tuesday. So listen, if you're not already a subscriber to our channel, subscribe now, because this is where we bring you the highest alpha per minute shows on the entire crypto internet. And if you are a subscriber and you like the show, just do me a favor and smash the like button, get this content out there, obliterate the like, and tell the YouTube algorithm that we're here and that we're doing an unbelievable job. And then lastly, before we get into the alpha, I want to just remind you that the banters, even if they come to you on a Tuesday, are actually brought to you by NordVPN. Now, it's very, very, very important that you understand what NordVPN does. NordVPN is a VPN service, and they are the crypto VPN service. These guys support our channel and many other channels when it comes to crypto. There's never been a more important time to be using a VPN than right now. And that is because not only does a VPN hide your IP address, which hides your IP address from hackers, but it also hides your IP address from the legal authorities, from DeFi protocols, from centralized exchanges, and anybody else that wants to know what jurisdiction that you're in. It costs less than $5 a month. It costs $3 a month to protect your crypto. Guys, sign up with a VPN, support NordVPN, who are our crypto channel sponsor, and protect yourself, keep yourself anonymous in this highly dangerous crypto game. All right, let's get into the alpha of the show today. As I mentioned to you, we are going to the East. We're moving away from the West. We're going to meet with 3 big investors, all friends of mine who've been on the show. I think all of them have been on the show before. Yes, they all have been on the show before. So we've got Ciara's son. She's from 𝗙 Ventures. We've got Dave Chapman from OSL, and we've got Yatsu from Animoca Brands. Guys, amazing to see you again. So good to have you. We had such a great show on Friday, and I just thought we got to bring all the alpha to our viewers. Can we get? I can't hear yet. Yeah, you're muted. You just need to unmute yourself.
I'm here.
Oh, he's here. Okay, Dave, welcome. Let's just make sure we got you here.
All good, man.
Okay, and Ciara here. So listen, guys, big news. Glad to have you back. I think the big news that I want to focus on is Hong Kong. Yat and Dave, I know you guys are actually based in Hong Kong, so you could give us a lot of insight as to. Hold on, let me just get the right screen there. You guys can give us a lot of insight as to Hong Kong opening up its borders to crypto traders and retail traders and what this actually means. But before we get there, I just want to go into Hong Kong and what Hong Kong actually is, because a lot of people are confused as to whether it's part of China, not part of China. Walk us through like whether Hong Kong is part of China, not part of China, how you guys live, whether you live under the Chinese laws and Chinese rules. Just give us a background of how that goes. Dave, I'm going to look at you first.
Sure. I mean, Hong Kong does operate under one country, two systems rule. The handover from the British to China happened in 1997. But obviously things have changed since then. Hong Kong is a very unique region. It is a special administrative region. It is part of China. That's a little bit of a controversial topic, I guess, that we've seen over the past few years. But politics aside, it is a very unique country, and so it benefits from a huge amount of. It's an international financial center. It's got great weather. It's got great people, great food, great technology. That's probably some of the reasons why I still call it home after 13 years of living here and have no intention of leaving. For those that are seeing Hong Kong as having challenges, I actually invite them to come here. I think everywhere in the world has challenges right now, and I think, but that all aside, I think Hong Kong is a fantastic place. And if we look at what's happening in Hong Kong right now, especially with the clarity that we're seeing with crypto regulation around virtual assets, around Web3, around digital finance, around fintech, this is why you're seeing a lot of people that are exploring Hong Kong as potentially their next headquarters.
Maybe to add a little bit more color, Hong Kong does issue its own passport. So you have a Hong Kong SAR passport, and it's still part of China. But for instance, you don't need a visa to go travel to Europe. You don't need a visa to go to other places around the world. You don't have the same restrictions. In fact, even if you're from sort of the mainland in China, coming to Hong Kong, you need to have special permission. But someone who lives as a resident of Hong Kong, a Hong Kong passport holder, he or she can go to China anytime. Right, so it's so in some ways, someone from Hong Kong has more freedoms in that sense. You can get BBC, you can get the New York Times. There's no restrictions in terms of news that you can get. There's full internet access. You don't need a VPN to sort of access certain things or that kind of stuff. That sort of freedom of information and freedom of access is something that Hong Kong has, like any other country around the world. And also the legal system is based on the English system, based on its former colonial past, which is the reason why Hong Kong is such a favorite trade partner in and to and out of China, right? So you can do business in Hong Kong as a port, whether it's goods and services or financial services, sign contracts with Chinese counterparts, but under basically a Hong Kong legal system, which is very similar to the English or Singapore legal system, and the consequence, of course, is that it's clearer that way too, as well, in terms of, arbitration and dispute. And that's really one of its strongest points, really, is that, you can handle these legal disputes in a Hong Kong court of law that will be honored in an international way that a lot of people might be skeptical about whether that would work in China. And I think that's the unique perspective that Hong Kong offers. Outside of the sort of crypto which I guess we'll go into shortly in terms of the crypto clarity, Hong Kong has always been a financial gateway for Hong Kong in and out of the region, right? So in other words, you can actually, for instance, do foreign stock exchange trading or purchasing of basically sort of foreign currencies in China. Renminbi exchange can only really happen in Hong Kong, for instance, right? So people route basically their Chinese capital to the world and into China through Hong Kong, which makes Hong Kong, the largest contributor to sort of FDI in China. But it doesn't do that because, Hong Kong people aren't necessarily investing. It's because foreign capital invests through Hong Kong into China for all the reasons listed above. And so I think the only thing that's probably not so great at this moment in time is the weather. It's pretty damn hot. I just came back, like 32 degrees, and 80% humidity. So I'm dying here, but it's okay. It's only for a couple of minutes.
I'll take hot over cold here right. Anytime. But yeah, I want to ask you a question. With that said, you're painting the picture that Hong Kong is part of China, but yet quite independent and quite more progressive and more free than China is, so to speak. When Hong Kong decide, when Hong Kong decide to pass a rule or a law like this, which allows for the trading of digital assets as from June 1 for retail investors. Do you think they need to get the buy-in of China? Is this something that
absolutely.
was definitely done in consultation with China?
Absolutely. And so because this is pretty significant, right? So and this is something that was also pushed very hard in the last 6 months. So this whole move for Hong Kong becoming a digital asset center isn't something that just suddenly happened. Basically, from the end of October, start of November, that was a policy direction that they sort of demonstrated. But back then, nobody was paying attention because they're like, Hong Kong is part of China. That's not serious. Let's not pay attention to this. But over a very short period of time, they've done all these moves and demonstrated that they're serious, right? So you have crypto ETFs basically already in the Hong Kong Stock Exchange. The Hong Kong Monetary Authority issued a tokenized green bond, probably the only country in the world, so to speak, to actually tokenize something officially from a country. There's the e-Hong Kong dollar that's basically in this sort of trial period. And of course, they have crypto retail trading, which I think Dave can probably speak to a lot more, where they've sort of taken 15 cryptocurrencies, including, most interestingly, some metaverse tokens as well, like SAN and AXS, which I think is unique in the sense that sort of gives, I think, sort of a little bit of an homage to sort of Hong Kong's perspective, that they don't view this as sort of trading, but really as a new industry, sort of bringing in the metaverse audience, as it were, into this as well, as a way to sort of enhance this, because in Hong Kong, you've got a lot of interest in that. But more importantly, the announcement of the retail trading was followed by the Web3 strategy paper from Beijing, literally a day after, and on CCTV, which is basically the national broadcaster of China, and nothing broadcasts on CCTV without the blessing of the government, starts talking about how you can sort of, how Hong Kong's looking to become a digital asset hub, and you can, buy Bitcoin in Hong Kong on Chinese national TV. So, we put all these things together and you go, very interesting coincidence. I wonder what's going on here.
So, Dave, I know you're very close to 𝗙 because you're actually one of the license holders. You're a license holder in Hong Kong. Walk us through what this 1 June opening of trading for retail investors actually means. And the reason why I say that is, I think if you read in depth here, what they're saying is that as from 1 June, they will begin to take license applications for retail trading, and not that actually all of a sudden retail will be able to ape into their favorite shitcoins in Hong Kong. I think they're very, very specific here you've said, I see that you guys are one of 2 license holders already. Walk us through what this process is and what the license actually looks like.
Yeah, okay. So also just for the viewers, like crypto regulation in Hong Kong isn't new. Whilst there's this uplift in regulation that does allow retail, the Securities and Futures Commission in Hong Kong have actually been regulating crypto since as early as August 2020. So we were the first to apply and first to receive approval in principle in August 2020, and we received a full license that allowed us to do Type 1, Type 7 activities with virtual assets. But the restrictions of that license, it only allowed us to deal with professional and institutional investors. And so whilst that was progressive, whilst it was innovative, obviously the icing on the cake that everyone looks for is retail participation. And so as Yat explained, and as you've talked about already, Ran, that's what has come to light now in June 1st of this year. And so as of 1st of June, the SFC, after a lengthy consultation paper where they received advice from participants, including ourselves, they made the decision that they would allow retail participations into virtual assets. The licensing regime itself is probably a little bit more restrictive than other regimes we've seen globally. It, for example, will only allow retail participation in what they call large cap, crypto tokens such as Bitcoin and Ethereum. It isn't going to unlock 2,000 plus altcoins for retail participation. But more importantly than that, it will actually provide the ability for retail to enjoy the protections like client asset protection, capital requirements, insurance requirements, cyber security controls. These are the type of protections that the retail market in Hong Kong haven't had access to. And it has actually pushed some of the retail participants in Hong Kong offshore. And if you look at what happened with the likes of FTX and other participants and the failures and ultimately the losses in client assets, I think some people are really looking forward to being able to deal with regulated institutions like ourselves and benefit from those type of controls that the SFC affords traditional finance.
So before I go to Ciara, I just want to quickly just make sure that I understand this. So up until now, there has been regulation in place. Now what they're saying is that any retail investor in Hong Kong will be able to trade it, but they'll only be able to trade these tokens if they're part of 2 of these indices, which limits the tokens really to some of the biggest tokens out there: Bitcoin, Ethereum, Litecoin, DOT, Uniswap, Link, etc., etc. And that's because they deem that these are safe for retail investors. Does that mean that as a retail investor in Hong Kong, I can go onto a regulated exchange, buy these tokens, and then go and ape into my favorite shitcoin by transferring these tokens onto Binance and then actually being in the ecosystem? Can I do stuff like that?
You can do that. There's nothing that's going to prohibit you from doing that. Obviously, I won't talk about other participants in this space, but if you are looking for the protections of the Securities and Futures Commission, at the moment that you leave their ecosystem, you disregard that, and you obviously don't benefit from such protection.
What about stablecoins? So I think one of the things that I read in the bill, or not the bill, but the articles I read, that stablecoins actually aren't legally regulated in Hong Kong, and that now I've seen that actually there are stablecoins which are being launched in Hong Kong. Does that mean that like USDT, USDC, all our favorite stablecoins actually won't be available as regulated stablecoins in Hong Kong?
Sure. So USDC, USDT, and other stablecoins are actually permitted in Hong Kong for professional investors. Under this new retail uplift, you are correct. They will not be able. Retail will not be serviced and won't have access to stablecoins such as USDC and USDT. As you did state, the Hong Kong Monetary Authority did do a consultation paper on stablecoins a few months ago, and there was a significant amount of interest. I think they had around 39 submissions that responded. I think that you will find as a result that, and this is my own personal opinion, I do believe that stablecoins will be regulated very shortly in Hong Kong, and that we'll see the introduction of potential retail participation for stablecoins. I think your next question, Ran, is probably, well, what happens for listing pairs on exchanges like ourselves? If you're a professional investor, you'll benefit from stablecoin listing pairs. If you're a retail investor, unfortunately, you'll have to go back to your original fiat days like we used to before the existence of Tether and USDC and other stablecoins. So going back to our roots, Ran, where you have to buy crypto in fiat, that's where you'll have to start for retail participation for now. But I do think that will change very quickly.
Ciara, I want to come to you because I know that you've been investing in China and investing in teams that originate from China. I don't want to put you in an awkward situation here. So maybe just walk us through how the Chinese are seeing this when they look at Hong Kong. Are they seeing Hong Kong as the place where they can now all of a sudden go and trade crypto? How does the Chinese community see this?
So first of all, trading crypto itself is not illegal in China for Chinese residents, right? So I think we've already seen lots of continuing increase of interest from investors based in Hong Kong, and moreover than Hong Kong, like a lot of from other regions, like close regions, and not just local institutions. I think the continuing traction created by the Hong Kong government announcement of crypto-friendly policies has successfully educated local institutions, and also attracted a lot of investors and also teams to relocate to Hong Kong due to this development. Especially because institutions like Cyberport, based out of Hong Kong, has been very supportive for attracting more Web3 investors and builders into Hong Kong. And I think recently I've seen the numbers being increasingly like crazy. Over 800 institutions and companies are already based out of Cyberport in Hong Kong, who's performing Web3 developments or investments. And I think that's amazing because they're also issuing 500,000 visas, to long-term visas for tech developers to Hong Kong. And that's a major thing that we look for like real support from local governments, compared to countries like Singapore. It's very, very unlikely to get a long-term work visa.
Hold on.
And moreover, to your like earlier questions about China and Hong Kong, of course it is one country and it is part of China, but we know that it has been a little bit hard to travel back and forth between China and Hong Kong, mainland China and Hong Kong, to perform any commercial purposes travel. And recently it has been lifted a lot. Long-term commuters from mainland China has also, has already faced less challenges in working in Hong Kong more long-term. And travel between China and mainland China and Hong Kong is so easy right now. You used to have a dual license for a car to travel between mainland and Hong Kong. Now it's you don't need a dual license. It used to be a very big thing to apply for
Hold
Hong
on.
Kong drivers.
Did you say that crypto trading in China is not illegal?
It is not illegal.
So can Chinese people trade crypto?
They can. It just it's very clearly stated in the paper, the documents that came out in September 2021, operating exchange license to facilitate the trades are not okay. It is illegal. But for Chinese residents to actually trade crypto, it is not illegal.
No, wait. So right now, if I'm in China and I've got a Bitcoin and you've got a Bitcoin and I trade my Bitcoin with you and we're both Chinese residents, Chinese citizens, that's fully legal.
It is legal.
And is it
There's
legal?
Well, it is not illegal. There's never a document issued out and came out and saying that this is legal. You can't do it.
And I mean, when you look at China and you look at China versus blockchain and China versus crypto, I get the feeling from the headlines that I'm reading, and again, this is what we're seeing in the West. I get the feeling that China is bullish on blockchain. And I'm just looking at these stats over here. You can see that this is the growth of blockchain applications in China up until 2022. And I'm assuming that the trajectory continues to grow. But when I look at crypto, and I look specifically at the value of investments into digital currencies in China, this paints a very different picture, which means to me, or looks like to me as someone on the outside, that China may be bullish blockchain, but not bullish, what's the word I'm looking for? Speculation. I don't know what the right word is. I don't know what the right word is. It feels to me like they like the technology, but they don't like the volatility and the speculation. Walk me through it, Yak and Ciara. Walk me through how you see that.
So,
Go ahead, Joe.
Yeah, so it is a very unusual concept where like blockchain is good, but crypto, like we have to take some time to see. It's probably the only country that have this concept. I remember in 2020 October when President Xi said, blockchain is great technology, we should all learn about it, and it all of a sudden become kind of like a national strategy. Even like all the corporates and universities, they should learn about blockchain technology. And the technology itself is it's promoted heavily in China, but the cryptocurrency side, I think it's more about risk control, right? Speculation, indeed, like you said, is not very supported.
Are there projects right now building in China? Are there blockchain projects with cryptocurrencies right now building in China?
Building in China, so ICO of projects is illegal. It is not supported in China. But for developing technologies for blockchain, it is okay. So there are tons of builders still in China.
Yeah, you were going to say something?
And maybe, I just wanted to add that China's central policy, generally speaking, it's not related just to crypto or digital assets. It's broadly speaking around ensuring a form of harmony and stability. And so when you start introducing anything that has speculative and very volatile, specifically the volatility being the issue, then you create unstable elements. And that's actually typically what China is against. And you see this action happening not just in crypto, which, as we know, is volatile, but also in the stock market, in sort of commodities and other areas, when retail starts to go in and trade. But generally speaking, blockchain technology and what it can offer to China, but also what China's influence and what it could mean globally, is, I think, of national importance. And this, by the way, is not a thematic that's a specific Chinese one. It is a Japanese thematic as well. It is a Middle Eastern thematic. It is a sort of Asian, broadly Asian thematic, which is around sort of removing themselves of this kind of a sort of digital hegemony in two terms. One is, of course, the US dollar hegemony, which obviously blockchain and crypto, broadly speaking, has a way in which it could sort of, influence in a way that, even if it's just a couple points, basically removes the dependency on US dollars. But the other one also is, when you think about, why the fascination on Web3, it's because most of the world, with the exception of places like China that have sort of isolated themselves, are now dependent and basically colonized by US Web2 companies, right? I mean, they're dependent on LinkedIn, they're dependent on Facebook, they're dependent on Google and Amazon. And they realize that this paradigm doesn't work for them. And with Web3, there's an opportunity for them to actually break out and sort of become, so it's not about just individual sovereignty, which is, I think, what a lot of people are excited in the Web3 crypto space, but it's also about national sovereignty, which is what the country's also excited about. So even going away from China, for instance, looking at Japan, Prime Minister Kishida-san has made Web3 and the metaverse, part of its national growth agenda. They have a DAO working group and an NFT white paper and are pushing Web3 really, really hard. And some of the model that you're seeing in Hong Kong's regulation is actually one that was taken from Japan's GFSA. And maybe one other interesting point is that Japan is probably the only country in the world, maybe, or one of the few that I can think of anyway, that has a legal IEO framework where you can actually sort of list a token through approval with the financial regulator in essentially the equivalent of a kind of an IPO, which happens in Japan at this moment in time. The only reason why trading isn't as big is because the tax rules were prohibitive, which they've been changing. So if you look at what's happening in Japan, the move is very much to try to become a big player as well in this space. So there's a lot of activity happening, and the agenda to do that comes from many angles, not just specifically, digital assets per se.
I must say, Japan, people underestimate how important Japan is to Bitcoin. And we actually did a show the other day on our channel, and we looked at a couple of things. We looked at Japanese liquidity versus the movement of the Japanese stock market, and you can see that's very correlated. But then we also correlated the Nikkei to Bitcoin. I don't have that chart here, but if you look at the Nikkei on Bitcoin, Bitcoin is literally a mirror image of the Nikkei. It literally follows the Nikkei. And so I think that a lot of people aren't seeing just how important Japan is. Everyone is talking about China and maybe Korea, but I think a lot of people are discounting how important Japan is when it comes to crypto and specifically crypto trading and adoption. I know some of the, 𝗙𝗿𝗄, I know one of the biggest communities actually is a Japanese community. Dave, you've been in OTC for a while in Asia. Like, how important is Japan?
It's a very important market, I think. It also shares some similarities to Korea. It is a very domestic market. It's very difficult for people outside of those markets to break in. If you look at some of the participants that have tried to enter the Japan and Korea markets, they haven't been particularly successful, and some of them have retracted. So it's important. It's also a very difficult market to crack. That would probably be what I could say on those markets.
Every market in Asia, specifically if you're coming from the West, is a very, very difficult market to crack. I want to ask you another question. The question is very much about sentiment. So the reason why I asked you guys is because I know you guys are serial conference goers. In fact, Iyat, I think you haven't been home. This is the first time you've been home in how many months? Like 3 months, 4 months?
Over 3 months. Over 3 months, yes.
And the last time I think I saw you was in Austin. Ciara, I think the last time I also saw you was at a conference somewhere in the world. So you guys go to conferences a lot. I mean, I think it's fair to say you're serial conference goers, okay? I'm the same. Tell me about the mood in conferences in the East versus the mood in conferences in the West. And specifically, I'm referencing Korea Blockchain Week. There was a big event that was held in Hong Kong, and I don't know if it's real or not, but I heard that 50,000 people flew into Hong Kong for the event and the side events. I don't know how many people actually attended the actual event, but it feels to me like the sentiment in Asia is very good. Tell me about the sentiment there versus the sentiment when you go to an event in the US.
Well, I would say in the US, it definitely feels a bit more muted. And there's also a little bit of lamentation in terms of, commiserating, what's going on. Lots of complaints about, certain actors in the US and politics, in terms of what's not working and so on. But I want to just interrupt you before we talk about Asia. I want to interrupt you. I was in the US now. I went to Austin. I went to Consensus, which was one of the biggest events. And then I went to Bitcoin 2023, which was in Miami, which is also it's a big retail event. You know what I felt like there?
I felt like we're in a boxing ring and they'd been through 10 rounds already, and they were standing, but they were really wobbling all over the place. That's how I felt when I was in the US now. And I don't know, when I go to Asia, it just feels like there's a hunger. There's a boiler room type hunger in Asia. Tell me,
Yes.
is that what you guys are feeling?
It is. It is. And I think one of the things to consider what happened in Hong Kong, for instance, is the number of Chinese officials that came to Hong Kong for that conference as well. So it wasn't just a case of retail. It was government officials from like every province and from every sector that came in there from all over the place. But, you know, I would say that feeling, if you go, for instance, you know, what happened in Paris Blockchain Week or NFT Paris, that energy was also pretty electric. So I think the US in particular stands somewhat alone in terms of its let's call it sort of muted feeling. But I think it also has to do with a little bit of shock, right? Because I think, you know, this is one of the very few times, if ever, that I can remember where the US is willingly giving up a lead, where being a technology company, but being US based actually may not give you an advantage as it always has in the past, whether it's in technology or in funding or in other areas. And that also, I think, is a bit of an unsettling feeling in comparison to what, you know, everyone else was used to. So it's a bunch of things that sort of comes into play there. But yes, the sort of the energy in Asia is incredible.
Sarah, what do you think?
I was in Denver. I felt the energy was still very good there. But then later, you know, the US was saying that Ethereum can be a security, and then CFTC and SEC were all going after Binance, everything. So I can understand why, you know, for Austin, people were feeling kind of low. And then on the other hand, you know, Hong Kong's opening up, and you know, NFT is a commodity, and you know, it's all very supportive. So that's maybe why, you know. And I also, you know, to Ya's point, very surprisingly saw lots of traditional institutions in Hong Kong are also trying to get into crypto. We were co-hosting an event, Web3 event with Bloomberg, and with tons of from traditional large institutions, and Hangzhou, you know, formed a partnership with Hong Kong for blockchain technology collaboration, and that's, you know, very rare to see. And also back to Japan, I think it's a very interesting market, but yet, you know, people pay 55% on tax for trading crypto. It's just crazy, and I think that's also why you can't really see lots of volume and liquidity happening on those regulated exchanges, like there are two top players there, like 𝗵𝗏𝗆 and CoinCheck. Real degen, I think, traders in Japan are still trying to use global exchanges because of the tax reasons. However, on the NFT market, it is a very good market in Japan, as it has real world-leading IPs there. As you know, Animoca Japan has, you know, worked with tons of great top world-class IPs there, and NFT trading volume in Asia has always been, you know, top, especially in China. Actually, buying power for NFT in China leads the way, and followed by, you know, by the States. And I think NFT trading platforms in Hong Kong is going to be very interesting going forward, as you know, it's being very supportive. It's commodity as long as you do AML and KYC. Right.
I must say, it's very interesting. Go ahead, yes, go ahead.
I just want to add to Tara's point is that Japan recognizes the tax issue, and that's why there's been a big push to change the tax laws, and that is, you know, supposed to be potentially coming into effect this year, which I think in and of itself is going to have a big effect in sort of, I think, activity in crypto overall. One of the reasons why Korea has this incredible volume is that, unlike Japan, it has effectively a tax holiday until next year. So in that sense, you know, you have a lot of trading that's taking place precisely because there is no taxes in the same way. And that you should imagine that effect to happen in a place that, you know, when it comes to GDP per capita, in terms of, you know, capital available, in terms of money flows and so on, you can expect that Japan will also become a big contributor to the global crypto market. And we also think China will actually, through Hong Kong, will also become a pretty important contributor to the market. So yeah, we're overall pretty positive.
It's amazing that you speak about NFTs, because actually I was looking at NFT volume today. And if I look at the NFT volume on all the big exchanges today, NFT volume is actually quite low relative to where it was, probably at some of its lowest levels since the NFT bull market that we had last year. But then you talk about Asia, and you talk about places like Japan, and you talk about places like Korea, and the adoption in those places around video games and NFTs is obviously, that's going to be one of the biggest drivers of adoption is probably NFTs. What do you think happens in the rest of Asia? Do you think it becomes an NFT? Do you think NFTs have another day in the sun because of Asia, because of real world adoption in Asia?
I think so. By the way, I don't think it's going to be just an Asia phenomena, but the difference, unlike you see in the US, and this is to me really more of a US phenomena versus the rest of the world, but in particular Asia, every major game company in Asia is looking at Web3 and NFTs as a strategy. Whereas companies in the US, the biggest companies, all actually can't do it, not just because of internal resistance or regulatory concerns, but also their own customer base is rejecting it because they generally have a pretty anti-capitalist sentiment, especially young Americans. Whereas however in Asia, for instance, whether it's from Square Enix or from Krafton, the creators of PUBG, or sort of Netmarble, Nexon, like every major game company, and it's not just companies like us, but just sort of incumbent sort of Web2 game companies are all pursuing a Web3 strategy, which basically means they're going to plan to onboard all of their consumers and their customers into Web3, which I think is a very positive sign.
Guys, when you look at this chart, I started the show on this chart and I showed that 82.5% of exchange traded volume is now in Asia. And 12 months ago, this was 64%. 12 months ago, the US had 27.2%, and Asia had, and now I think the US has got about 10%. So there it is, 10.3%. When you look at this chart and then you overlay it against the US's, stance, and you can see that when you look at like President Biden himself tweeting and saying, we think Congress should cut tax loopholes that help wealthy crypto investors save $18 billion, which we now know is garbage. You got Gary Gensler going out full tilt on crypto investors. You've got this. I don't know if you guys have seen this, but if you haven't seen this, Jamie Dimon was asked whether he would consider running for president. Now, initially I thought, listen to his answer, just listen to the answer, and then I'll tell you what I thought. But then they spoke about it on the All-In pod, so just listen to this.
Now, Jamie, I know last week you talked a lot about succession or about your position, that you're not talking about retirement right now. I do need to ask you, though, and your name has been bandied about for years about public office. I mean, I don't think Wall Street's too pleased about a potential Trump versus Biden runoff next year. Has that scenario ever crossed your mind that you would run for public office or even accept a cabinet position?
Listen how he answers.
Obviously it's crossed my mind because people mention things to you and stuff like that. I love my country, and maybe one day I'll serve my country in one capacity or another, but I love what I do. I think JP Morgan do a great job for helping Americans, for helping countries around the world, and this is my job. This is what I'm going to do, and I'm quite happy doing it. I still have the energy to do it. I mentioned, that when you don't, I think people should give up the job. We've got a fabulous management team who I really enjoy working with.
He didn't shoot down the idea of running for president. Now, imagine we get Jamie Dimon for president in the United States with all the beautiful things that he's had to say about Bitcoin. Imagine we get that in the United States. Now, I thought this was
Rand, Jamie Dimon can't run for president because he's only 67 years old. He's too young to run for president.
You're saying he's way too young. You're saying he's way too young. Yes. Listen, I thought it was hogwash, but then I was listening to the All-In pod. I mean, those guys are four very connected guys in the world, and they were talking about, potentially, Biden getting too old, potentially Jamie Dimon fills his shoes, and that would be the best case scenario. So I don't know, I'm looking at this, and I'm looking at the exchange volumes, and I'm looking at the attitude that you guys are portraying from Asia, and I'm comparing it to the US, and I'm thinking to myself, like, the US is really going to fall far behind. Maybe they want to fall really far behind. Maybe they've said, look, we don't want to be part of blockchain technology. It's too, you can move money around to terrorist organizations. We don't want to have anything to do with that. We'd rather focus on AI, electric vehicles. I mean, we're a bunch of crypto people. We want to think that, our whole lives are crypto, and how can the US want to give up crypto? But maybe to them, it's like a calculated risk to say, we actually don't mind falling behind when it comes to crypto. And that's maybe creating the opportunity for Asia. What do you think?
I think it's a very dangerous strategy, to be honest, Rand. Pushing innovation offshore having this myriad of legal landmines and regulation that make it very difficult to understand how to practice in the region. We've all heard about this rumored Operation Chokepoint 2.0, whether it's a real thing or not. It certainly probably seems that way, given what we've seen happen to the likes of Coinbase, to Kraken, to some of the largest crypto banks operating out of the US. I think, the US is still a very large market for crypto, but they are playing potentially a very dangerous game with pushing innovation offshore, pushing participants, away from that market, not servicing Americans. I think it could come back to bite them, could come back to really pay severely for them. And I think that's why you're seeing so many people look at other regions where there is clarity, where there is very clear regulation, like Hong Kong, like Asia, in the Middle East, for example. And we're already seeing that happen today. So I think it's going to be an interesting way to play out. What happens with the Trump and Biden and potentially Jamie Dimon contending to run for president in the future? Let's see what happens. Personally, I'd really like to see a more diversified age representation of leadership, as opposed to going for the older end of the spectrum.
So you mean someone in their 70s? You mean you'd take someone in their 70s right now, right? That would be good.
I'd like to see that there's be more representation of potentially younger candidates, to be honest, Rand. But let's see.
Yeah. But I think there's another narrative here that, at least from our lens, it has to do with the political landscape in the US, which is about the upcoming election. And the problem is that the Democratic Party has very much sort of aligned itself to, I wouldn't say strictly anti-capitalist, but definitely a perspective of a much more socialist leaning direction, in the sense that that's its constituents base, which is young voters. I think a recent Pew study showed that 60% of people under the age of 30 veered more socialist than capitalist. And I think there's some good reasons behind that. If you have been sort of looking at how capitalism has worked for you as a young American over the last couple of decades, it has not worked for you at all, right? Unless you happen to be in the bubble of the Bay Area. But even if you think about what's happening in California right now, right? I mean, that's some crazy stuff going on there, for instance. And in comparison to places like Austin or Miami, where there is pro-business, of course, and sort of pro-digital assets, which has sort of led to its particular growth, but other areas have not been able to do that. And so I think this perspective, coming from another sort of outside lens, I grew up in Europe actually, and we were not allowed to talk about money in Europe. It was kind of considered a little bit dirty. It was something that you had to sort of pretend that didn't exist, right? And even if you had money, you had to sort of hide it. You couldn't show that. But then when I went to US, it was almost sort of celebrated. You made money, good for you. The American dream, I can achieve that. And that has kind of washed away for most Americans who don't believe in the American dream in the same way, or actually at all. When they look at someone who's made a lot of money, they almost look at it as, and I think this is, history of financial fraud and everything that's taking place in the banking system. People look at that and compare it the same way. So, a banker on Wall Street doesn't necessarily get more respect than necessarily someone in the crypto world. It's almost kind of the same thing. And it's not helpful when people are making lots of money in crypto. And unfortunately, when Lambo is not exactly an endearing term, right? That's which is, frankly, a personal frustration point for me, because it's just one of those things that's not what the industry is about, but unfortunately is something that people associate with. But in contrast, the American dream is very much alive in Asia, because in living memory, over the last several decades, people have benefited from the growth of capitalism and property rights, which Americans have taken for granted because it's been there for centuries. So they don't know what it's like not to have it. But I mean, think about what happened in China. 800 million to close to 1 billion people lifted out of poverty, or South Korea, right? Basically, that had nothing, was actually an economy that was poorer than North Korea, a lower GDP than North Korea, and now is 12th or 13th largest GDP in the world, through intellectual property, through property rights, and embracing democratic principles and capitalism, right? So we all remember a time where capitalism has worked for us. So even though there's inequity, we still believe that is a better path forward. That's why I think Asia also is more embracing to digital assets, because they get it, because they understand what it was like, and they still have that memory in comparison to, I think, the US, at least with young Americans, which unfortunately is an important voting base for a certain party, I think.
Yeah. Sia, you invest in companies in the US, you invest in companies in Asia. what are you feeling now, like as the sentiment between, like, are you finding better investments in Asia? Are you finding better investments out of teams coming out of the US? I know your capital is kind of split.
Yeah, I mean, we're not specifically looking at capital in a country base, and also we fund generate out of balance sheet, so we don't really have a sort of fund mandate in that sense. We're quite flexible, but I would say that definitely the sentiment in Asia is much better. More companies are emerging in Asia for sure. Even it's American founders that are setting up something in Asia, for instance. That's becoming sort of a setup as well that we're seeing more and more, for instance. But what's interesting is, and ironic as well, is so that I would say the principal thought and the design of Web3 companies in the US is typically closer to the ethos just because they understand it. Like if you're really deep into the belief system of democratic principles and property rights, actually that's something that's actually, if you think about it, quintessentially quite American, right? Whereas I think there is a lot of companies in Asia that are actually thinking more Web 2.5, particularly the game companies, but on the Web 2.5 spectrum are a little bit sort of more on the Web 2.3 side than on the Web 2.8 side, shall we say, right? They're sort of more veering towards control than necessarily sort of really decentralizing in comparison, I would say, whereas I think many of the American counterparts are thinking much more decentralization faster because they're bigger believers in democratic principles. So there is a little bit of that gap, but it's sort of coming very close together. But generally speaking, I think, we are, building something in Web3 doesn't necessarily mean that you always have to have a fungible token, right? So in other words, if you're doing, NFTs, if you're building in culture, if you're making a game that doesn't require a fungible token, then honestly speaking, building in the US is just fine as well. It's really, the issue of the fungible token that is the most controversial topic in the US for all the reasons we already know.
Sia, what do you think? I mean, you're also investing in both areas. What do you think?
Right. So I think, back in, I say like 2017, 2018 time, it was like the infrastructure layer, all the public chains, majority of the teams are still, based out of the States. And when it comes to like the market right now, a lot of the companies we're funding right now are application layers as, the infrastructure is becoming more mature and TPS like significantly higher that can actually, facilitate good tractions for mass adoption of users for applications. We're seeing tons of good Asia founders. As when it comes to in details user operations, it's just Asia and China specifically has the edge, right? When you look like all the large user applications, TikTok, WeChat, Alipay, it's all Chinese founders. So just because of that reason, and I also believe that the next bull market is gonna be, good real applications with tons of users. So that's why we're spending more time finding good users and founders in Asia. And back to the points when I was just thinking that the chart that you just showed us, the trading volume from Asia and the States right now and compared to 12 months ago, I'd say probably, I'm very interested in seeing what it looks like 2 or 3 years ago. Because around that time, it was right about the time when China government was shutting down exchanges and all the top exchanges were exiting from the Chinese market. So maybe like that affects this this chart a little bit.
Yeah, you could be right. Yeah, you could.
Yeah, and then
there could be some bias because of the timing of the 2 years that are specifically taken.
I was just guessing maybe like even like 2 or 3 years ago, Asia is probably just, trading about 80% of the volume anyways. And then also now, I think one big reason that America specifically, the volume has dropped so much is because the regulations, the States is coming after Binance and it's forcing a lot of the big market makers stop trading with
exactly. Actually, funny enough, as we are live, we have the SEC actually issuing a summons against Binance with a whole lot of allegations, and that's actually one of the reasons why the market is actually so badly down today, because you can see the market's actually come down quite a lot because of this, because the US is going after Binance.
Yeah, so when you have Jump and Jan's trade, all stop trading at the biggest exchange, it definitely affects the volume there as well.
Yeah, I want to ask you a question. I opened this up, and I really need to understand something. They call these tokens the Chinese narrative tokens. you got Conflux, you got ACH, you got a whole lot of other tokens here which are known to be Chinese narrative tokens. Can someone explain to me what these Chinese narrative tokens are? Because they're not being traded out of China, are they? They're not projects that are in China, are they? They're not tokens that are launched in China. What is this Chinese narrative? Can someone clarify for me what is this Chinese narrative?
Well, to my understanding, it just is Chinese background founders where their stories culturally is more, accepted and translate well into the Chinese, Chinese culture. But when it comes to China concept token, BNB is one too. HT, KuCoin token, OK token. It's all Chinese narrative tokens.
Yeah, okay token, BNB, yeah, but BNB token. I guess because most of the trading is actually done in Asia. I mean, yeah, do you have any thoughts around like what these Chinese narrative tokens are? Because they're not projects that are in China.
Well, I mean, first of all, honestly, okay, so first of all, there is no such thing as a Chinese narrative token in the classic sense, in the sense that it's not about sort of what happens in China. And we have to also bear in mind that this market does have a whole bunch of, funny things going on as well, generally speaking, right? I mean, in terms of sort of people sort of creating tokens and creating stories around them. So, everyone just do your research and make sure you know what you're getting into,
sure.
Broadly speaking. However, that aside, and I won't comment on those specific tokens, because after all, does it mean every token that Animoca is involved in is somehow some kind of Chinese narrative token because we're based in Hong Kong? No, of course not, right? You have to look at the underlying value and what the company is doing or who's involved, for instance, right? But I would say there is one thing, just to Chiara's point, is that the global diaspora is bigger than the population of France. Right, and in that sense,
Fair
actually,
enough.
when it comes to volume, so when we look at, for instance, NFT holders, for instance, in the US, Asian Americans actually account for a significant proportion. Per capita, probably is amongst the highest proportion of holders than say other groups around the world, right? And I think it has a lot to do with financial literacy, meaning that financial literacy starts at a pretty young age with a lot of Chinese and probably Asian communities as well. And it's not just the sort of Asian minority myth that's sort of going around. That's not really what I'm referring to, but more about the fact that it's part of the education system. And also part of the fact of this classic sort of immigration story, right? Which is, you have to sort of, many of the early sort of Chinese that had to leave China because of the Civil War or because of revolutions were all sort of spread out and had to find sort of a place of safety and security. And therefore all sort of, had to think about ways in which they could survive, which certain other sort of groups have as well. And one of the funny things that I was told, for Chinese overseas, many of us, and I guess I won't say it for everyone, but at least many of my sort of, let's call it subjectively of my friends, when we go around, there's this sort of thing that people say, why are you all obsessed about the price of real estate in wherever you go? Like, why does this matter for you so much, right? And particularly coming from, when you visit Europe. And it isn't because we necessarily want to buy stuff there. It's because it's just a measure in which we sometimes try to estimate the economy. We try to sort of size up basically how is the country doing. And there's a sort of an interest in sort of owning property, very much strongly so in Chinese communities around the world, which is sort of lends itself to sort of, financial literacy and knowledge around that as one form. Which I think is really important, because when you think also about Web3, broadly speaking, to enter Web3, to enter the crypto markets truly, you must actually be financially literate, right? You can't actually enter Web3 and not understand how financial systems work. If you don't know how that works, then you don't know why you're trading.
Yes.
You don't know why you own something, right? So you have to have that correlation, and there happens to be a very high concentration of that also in specifically the Asian diaspora around the world. Which lends itself very well for digital assets. So you'll find a very high proportion of sort of overseas Chinese also having crypto relative to other let's call it ethnic groups.
Yeah, guys, just before I let you go, we got like 2 more minutes. Do you think that it's fair to say that Asia is hungry for blockchain at the moment, or do you think that I'm running ahead of myself? If I say to you, is it fair to say that Asia really wants blockchain? Am I running ahead of myself? Are they more neutral, or are they?
Oh no, they're hungry. Hungry is the right word.
Ciara,
all you have to do is take.
Yeah, I agree with Jan.
Tell me, yeah, you're saying all you have to do is?
No, every time the US says something or something happens in the US about some kind of crypto scandal, our financial secretary issues a blog post talking about how crypto is important and how we're here to support it. Just take a look at that history. I mean, just in comparison. And so they're clearly reacting to what's happening in the US and kind of saying, oh, well, the US doesn't like that, but come here. We're here to sort of help you. So it's a hunger. It's an ambition for sure.
Dave, what do you think?
I'm biased, Rand. You know the answer already, man. Everything's coming back to Asia.
You just want us all to come and live in Hong Kong. Guys, listen, it's been amazing. I'm glad we managed to do this again. Thank you so much. Much love from the fam. Much love to all of you. I'm glad you did. I know it's very late for you guys, so thank you so much, guys. Really appreciate it. Thank you, guys. Cool, so that's them, guys. And remember, I had to bring you this. It was just so full of alpha and really need to get into what's happening in Asia. And when do you get an opportunity to talk to three titans in the industry like that? And that's part of us bringing you the highest alpha per minute show on the internet. That's really what it is. And remember, if you enjoyed this, go and support our sponsor, NordVPN. They are the VPN sponsor for crypto. You do mask your IP address. It does cost less than $4 a month, and it helps us bring you more of these, and it helps you guys stay safe. And you guys need to stay safe because now we have Binance in trouble, of all people. Well, no surprise there, no surprise there. Listen, I'll see you guys again tomorrow, or unless if anything happens in the market, I'll be back here. Until then, trade well, my friends.